welcome to today's video, which is called Calm Before the FOMC Storm. It will be packed with what I see unfolding before FOMC and thereafter across various assets. So, you know pretty well what I do on my site for clients, the daily YouTube channel, and of course rich Twitter feed. Yesterday pre-market S&P 500 looked like going sideways to up, preparing what I was calling for the bullish trap. However, the trap sprung very early and downswing followed. Did it respect key supports and resistances, the subsequent price action? I'll give it more color in over the next two charts. But you can see that the 5-6-50s had been respected as support. And the same goes for today's pre-market action. I'm always recording it 2 hours before the opening bell roughly. Such was the key tweet this European morning, meaning approximately 6 to 7 hours before the US opening bell, summing up the situation. You know my remark at the close yesterday about some buying interest across select sectors and what I made of it. I evaluated the situation as the one where the bullish upswing before FOMC can still develop. However, now let's give it more color. We are seeing the downside being respected, tested, and the buyers are knocking on the resistance which is formed by 5-6, say 85 approximately speaking, which was the high today pre-market during the Asian hours. By the same measure, the same way, it had held the 5-6-50 to 5-6-60s, low 60s. These had served as reliable supports, and it's a promising early sign that this level, 5-6-50 or 50s in general, had not been even touched during today's pre-market session. Let's drop a few words about what I see from what I expect from FOMC. In a few words, very slight dovish tint, while still maintaining the data dependency cautious outlook. I do not expect an adjustment in the dot plot, so officially will be still sticking with one rate cut for 2025, but in reality I do expect 2 cuts this year. Caution, erring on the side of dovishness ever so slowly, and during the conference the market will see through it. Inverse statement is that the best chance that the dollar has to rally is today, especially when its performance, its growth potential, and the cautious but not gloomy assessment of US economic status for all the stagflationary data that have been coming lately would be contrasted with what is the rest of the world, including developed economies' outlook. So that would work in the dollar's favor today. So the dollar has the best chance to actually do that retracement that I had been covering earlier in the week. All these videos are connected to each other, so I do hope that you had reviewed yesterday's one, and of course the extensive Saturday's one. Those are the ones that serve to take you through the week and introduce broader perspectives. Thank you for liking these videos and subscribing to the channel. This is the sectoral view of yesterday. nothing special. It was definitely a risk of day. You see how consumer discretionaries and tech had been leading to the downside. And this is, pardon me, on a day when Nvidia has a conference, much awaited one. And still it did not do well, and out of the most important sectors on my daily watch is the almost neutral financials, which is of course a sign in itself. So you must see and contrast it against the performance of stocks such as Nvidia, Palantir, SMCI and Tesla. Don't let these four heroes of yesterday cloud your judgment as to where we stand in the S&P 500 bottoming process. Yes, bottoming process. And how shall I prove it to you? Have a look at this 5-day sectoral overview. This is the chart that I featured in Saturday's extensive video, to which I will be linking. I will be linking throughout this one, pardon me, to several ones that would be most relevant for your understanding of where markets are and what I see unfolding ahead. I will be laying out objectively the data for you as always. So you can see that tech is not really going anywhere. Financials, nothing to write home about. Either industrials, consumer discretionaries, consumer staples, clearly showing the consumer under pressure. So you can perhaps broaden that understanding of those four raised stocks with Norwegian Cruise Lines, which was another key one that had declined yesterday, telling you much about the status of the consumer and how he or she perceives the future. And now this is how the 5-day sectoral overview looks right now. Tech has kind of recovered, and this is notable given that Nvidia had made it in no way to the technical 130 target and reversed of 123 approximately to the downside. You can see though the performance of financials, which is quite encouraging, and it is actually the most encouraging sign, which is why I had started that tweet late at yesterday's closing bell with reference to financials. So this paints somewhat the very different picture, and here you see that financials are not exactly rolling over. The daily candle has a sign of just a daily consolidation before it can move higher still. Tech bought before the closing bell, and again for all the Nvidia momentary performance gloom, semiconductors are actually still doing quite well, and this includes Nvidia. This ETF is quite heavily skewed towards Nvidia, so that makes it all the more notable. Communications, similar story, and basing, not breaking down. Consumer discretionaries. Here we could have the question of how much of a retreat is enough, and it much depends upon what would be the monetary policy prospects going forward. But this is not going to be a great drag, because just as the prior ETF, this one is heavily featuring Tesla as well. So once again, this chart, and I guess it's pretty clear which way I expect the break going into FOMC and shaking off the pre-conference volatility, which way I expect S&P 500 to go within the context of this, as of late, Thursday local bottoming process. So right now it is quite clear, and I will be updating client swing and premium with everything that is going on and worthwhile commenting on. I join page to help you select what's right for you based on how and what you trade. You know pretty well my journey. I suggest you dive into it. Many eye openers, obligatory disclaimer, and talk soon.